Hi there, welcome to London Academy of Trading's weekly market insight. Trump looking to end with a bang, Biden promises big, the UK stumbles but ahead of the pack, and Bitcoin next. Plenty going on this week, especially across the pond. In the US, the current President Donald Trump has been impeached once more, this time for being blamed for the attack on the US Capitol building in Washington, or at least for inciting the attack. It seems he has conceded to the incoming Biden, but isn't going to make the transition as simple as possible, as was expected. Meanwhile, in line with the US's worst weekly jobs data since March, the incoming President Joe Biden has pledged a stimulus package of $1.9 trillion, specifically $400 billion for COVID-19 management, more than $1 trillion for direct relief, and $440 billion for communities and businesses. It's a great offer which many believe was expected and is required, but he will face some opposition from the Republican contingents when passing it by Congress. In addition to his use of the phrase, everyone has to pay their fair share, and closing loopholes, this strongly suggested that tax will increase and so negatively impacted US equities. As the package was anticipated and due to possible opposition, US equities continue to make losses since reaching highs a week ago. Here we can clearly see the S&P 500 at all-time highs, and since then we have come off broken stroke testing this support level here at 37.83. All this ahead of the inauguration next week, which has seen Washington turn up its security level in light of the recent pro-Trump protests. In the UK, in light of November's partial lockdown, GDP has shrunk once more to 8.5%, 2.6% economic contraction from previous levels. This suggests a double-dip recession, given the fact that we have entered into a period of even stricter lockdown measures. The FTSE 100 index has finished the week down and is now testing support at 67.42, possibly breaking it throughout the rest of this afternoon. On the plus side, the UK is leading the pack on COVID-19 vaccine rollouts, having already vaccinated over 5% of the population here. On to Bitcoin, that mysterious being that is Bitcoin. Take it down here. And possible bubble pop, or is it just a great time to buy some more? After an unprecedented run to the 42,000 level, we saw a 25% loss over Sunday and Monday of this week. It's since rebounded back to the 40,000 level. The slump and partial rebound has been seen before, specifically back in July 2019. If I scroll all the way across back to July, we can see very similar fall and rebound. Of course, considerably smaller, and the numbers are not quite the same, but here we can see there was the sell-off, there was the partial rebound before then making even further losses. Another point where that might have happened, well, of course, that would be back to the initial sell-off in 2017 from the major highs back then. If we go back into the daily chart, scroll all the way back here, this was the initial rally from Bitcoin back to the 20,000. I'm sure we all remember that. And here we can see the sell-off, potential bubble popping. We then saw partial rebound, considerable rebound, and then we made even further lows. Okay, taking this into account, I would suggest to be wary of reinvesting until clear signals of a rally are in play. The week ahead sees Chinese GDP, early doors. We then have US presidential inauguration on Wednesday afternoon, which is sandwiched by multiple rate decisions, as we can see throughout this high impact data here. Multiple rate decisions from Canada. We have Japan here on Thursday, and then the Eurozone here on Thursday also. Finally, on Friday, we have a fair bit of European purchasing data wrapping things up. Catch you next week. Have a lovely weekend, and please do stay safe.